The Biden administration's newly announced student loan debt cancellation policy, updated September 30, 2022. On August 24, 2022, invoking the HEROES Act of 2003, the U.S. Department of Education, ED, announced a new one-time student loan debt relief policy to address the financial harms of the pandemic for low and middle-income borrowers, that is to make available to millions of federal student loan borrowers up to $20,000 of loan cancellation benefits per borrower. This action represents a departure from other types of student loan debt relief, which historically have been available to borrowers on a more targeted basis and typically provide relief to individuals for fulfilling employment requirements, for repaying their loans according to an income-driven repayment plan, or following borrower hardships, for example, total and permanent disability. These programs, to date, have provided relief to hundreds of thousands of borrowers, but they could ultimately provide relief to more. The administration's new policy is broader in scope and is to be available to tens of millions of borrowers based on limited eligibility criteria. The one-time student loan debt relief policy. Federal student loan debt exceeds $1.6 trillion and is owed by approximately 45 million borrowers. On August 24, 2022, the U.S. Department of Education announced a one-time student loan debt relief policy that it estimates will provide some amount of loan cancellation to most borrowers. The Biden administration plans to cancel the following: up to $10,000 in student loans for borrowers whose annual income in 2020 or 2021 was less than $125,000, for individuals or married borrowers who file their federal income taxes separately, or $250,000, for married couples filing jointly or heads of households. Borrowers enrolled in post-secondary education as dependent students between July 1, 2021, and June 30, 2022, will be eligible for cancellation based on parental income, and an additional $10,000, for a total of up to $20,000, in student loans for borrowers who meet the above criteria and received at least one Pell Grant in any amount at any point. A borrower's cancellation benefit is to be capped at the amount of their outstanding debt. However, borrowers who made voluntary payments on their loans during the COVID-19 payment pause and qualify for debt relief may automatically receive refunds of those payments in limited circumstances. Cancellation benefits are to be available for the U.S. Department of Education held loans and defaulted Federal Family Education Loan (FFEL) program loans held by a guarantee agency. The U.S. Department of Education held loans include those loans made under the Direct Loan Program and those made under the FFEL program or the Perkins Loan Program that have been transferred to the U.S. Department of Education. For the Direct Loan and FFEL programs, eligible the U.S. Department of Education held loans include subsidized loans, unsubsidized loans, plus loans made to graduate students or parents of dependent undergraduate students, and consolidation loans. Loans must have been disbursed on or before June 30, 2022, except that for consolidation loans only the underlying loans that were repaid by the consolidation loan must have been disbursed on or before June 30, 2022. Additionally, direct consolidation loans comprising any FFEL or Perkins Loan Program loans not held by the U.S. Department of Education are eligible for debt relief, so long as the borrower applied for consolidation before September 29, 2022. Borrowers with qualifying loans in any status, including in school, in repayment, in grace, or in default may qualify for the loan cancellation benefit so long as they meet the income requirements. If a borrower has multiple qualifying loans, the U.S. Department of Education has developed the order in which it would apply the cancellation benefit. Generally, benefits are to be applied first to defaulted loans and then to non-defaulted loans, with the U.S. Department of Education also making allowances for whether a borrower has multiple defaulted or non-defaulted loans and taking into consideration the specific program type, for example, Direct Loan Program, under which the loans were made. If a borrower has multiple loans within a program type, the U.S. Department of Education would apply the benefits considering the loan's interest rates, for example, apply benefits to higher interest rate loans first, subsidy status, for example, apply benefits to unsubsidized loans first, date of disbursement, and outstanding balance. For borrowers with remaining loan balances after the cancellation benefit is applied, the U.S. Department of Education has stated it will recalculate their monthly payment based on their new balance, which may reduce such borrowers' monthly payments. How borrowers may receive benefits. Qualifying borrowers may receive the debt relief benefit in one of two ways. First, the U.S. Department of Education estimates that nearly 8 million borrowers are eligible to receive the benefit automatically, based on relevant income data already available to the U.S. Department of Education. Such borrowers need not take any action and are to be informed by the U.S. Department of Education of the debt relief they are to receive. However, borrowers may opt out of receiving the automatic debt relief. For borrowers for whom the U.S. Department of Education does not have relevant income data, the U.S. Department of Education has indicated that an online application will be available in October and that borrowers would not need to provide any supporting documentation. The U.S. Department of Education has stated that, in most cases, once a borrower completes an application, they can expect relief within 6 weeks. Borrowers must submit the application by December 31, 2023. Potential impacts on borrowers. The Biden administration estimates that over 40 million borrowers are eligible for some amount of relief under the policy. About 27 million student loan borrowers will be eligible to receive up to $20,000 in cancellation benefits, and about 20 million borrowers would have the full balance of their loans canceled. In addition, the administration provided an analysis of characteristics of borrowers who may receive relief under the policy, which included the following. Of eligible borrowers, 21% are 25 years old and under, 44% are ages 26 to 39, and more than one-third are ages 40 and up, including 5% who are senior citizens. Only individuals or households in the bottom 95% of incomes in the United States, that is, not in the top 5% of incomes, will receive loan cancellation benefits, and 87% of loan cancellation benefits, in terms of dollar amount canceled, will go to individuals earning less than $75,000 annually. More recently, the administration released estimates of the number of borrowers who may be eligible for the one-time debt relief by state. Author information: Alexandra Hegg, Analyst in Social Policy.